Welcome everyone to Vested Interest. This is Shane back for a stock pick of the day video. It is Thursday, May 15th. This will be the last one of the week. We do these Monday through Thursday, but today we're going to take a look at Dick's Sporting Goods. This is out of the consumer discretionary sector. Before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click the notification bell so you're notified whenever I put out any new content. Again, I do this stock pick of the day video series Monday through Thursday. We take a look at a company stock that's pulled back. Well, most days we look at a stock that's pulled back. Every now and again, we'll look at one that's on the rise and run it through my screener, see if it makes it onto my watch list. Just keep in mind, this is just an initial screener. If it makes it on my screener, it does not necessarily mean that I am buying. It just means I am interested in doing more of a deep dive into the financials of the company, looking at their balance sheet, the income statement, and figuring out a discounted cash flow analysis and a range I'm willing to pay for, and then possibly buying whenever it falls in that range. And sometimes, even if it's a good company and meets the criteria that I'm looking for, I'm not adding new positions, or I'm building out existing positions, or there are better opportunities. That's the nature of the market. You can't invest in everything unless you are picking something like VTI, which is the entire stock market, the U.S. stock market, or VT, which is the world stock market, or the S&P 500, which is just the top 500, and that would be something like VOO. But enough of the rambling here. Special thank you to the subscribers and viewers of the channel. Really do appreciate it, and make sure to share with anyone that you think that might find value in the content, and watch to the end if you could. Watching, sharing, dropping comments, all of that, and all the rest, the thumbs up, subscribe, and notification bell really does help out a small YouTube channel like mine. This is the Vested Interest stock screener. This is the criteria we will be running through in the video. We'll check back in the end, see if it meets 5 of 8 to make it on my watch list. If it was a bank out of the financial sector, we would add in price to book with using 1 as fair value. That is really just for companies in the financial sector, like banks and insurance companies. Don't blindly use that for any company outside of the financial sector. Make sure that if you are looking at something using price to book outside of the financial sector, you are comparing it to itself, historically average, and you are comparing it to other companies in the same sector doing the same business. Let's get back to Dick's Sporting Goods, www.dickssportinggoods.com. That's www.dickssportinggoods.com. www.dickssportinggoods.com. That is their homepage where I pull this information from. Dick's Sporting Good was founded in 1948 when an 18-year-old Dick Stack was working at an Army surplus store in Birmingham, New York. An avid fisherman, Dick was approached by the store owner to come up with a list of products needed to get into the fishing tackle business. After Dick presented his suggestions, the owner told him he was a dumb kid and had no idea what he was doing. Dick was upset and promptly quit. He went to his grandmother's house, where he spent a lot of time as a kid, and told her what had happened. Dick's grandmother asked how much it would cost to build the store himself. Dick said it would cost $300. His grandmother went to the cookie jar where she kept her life savings and gave him $300 and told him, do it yourself. Dick used that money and his relentless work ethic to open a bait and tackle shop in Birmingham. By the late 1970s, he expanded his product line to include much of what you'll find at Dick's Sporting Goods today. And I can tell you, with 2 kids, we do spend a bit of time at Dick's Sporting Goods. It is a retailer that sells anything, not just the outdoors. They do have some fish and hunting sections, but also sporting goods, right? So it's stuff for my daughters. My one daughter plays flag football, so stuff for her flag football, like her cleats. My other daughter plays volleyball. My youngest daughter also played softball, so her softball bat and stuff like that. It has everything around sports: baseball, basketball, football, you name it. They are going to try to sell you, whether it's training gear, whether it's the gear you need for game day, whether it's the gear that you're wearing whenever you're working out. They are going to be able to sell it to you, whether it's online or in one of their brick and mortar stores. Now we are talking about Dick's Sporting Goods, ticker DKS, out of the consumer discretionary sector, and we are talking about them because they are down 14.58% of the day. Big drop on the day. Closed out the day at $179.05. 52-week range as low as $166.37, as high as $250 or $254.60. So they are within 15% of a 52-week low. 191 and some change or less puts them right up against it. So pretty close to their 52-week low right now. market cap of $14.334 billion, a beta of 1.19, a PE ratio of $12.75 per share, EPS higher than that. One of the few times you see earnings per share growth, higher than the price to earnings at $14.04 per share. Earnings date was today, May 15th, so I'm assuming there was something, whether it's their projected forecasts were altered down or whether they missed top or bottom line. You'd have to go look at their earnings report and see what's going on, but I'm assuming something was reported that didn't or spooked the market that the market didn't like. For dividend, $4.85 per year. There are quarterly payers to divide by 4, though we will see that here towards the end of the video. Dividend yield starts at 2.31% if you were to buy them now. Ex-dividend date, March 28th. Looks like they paid out on April 11th, so you would be in line for the next dividend, but you're going to have to wait a couple more months to get it. 1-year target estimate of $222.96. So they see some upside from here, but not quite getting back to its 52-week high, at least according to Yahoo Finance, where I pulled this information from. Not affiliated with Yahoo Finance, just one of the sources I go to for information. Jumping over to the right, I like to look at dividend yield theory to see if the company is potentially undervalued. It is just a quick check. It is not the end-all be-all. But to do it, you look at their 5-year dividend yield average, 1.96%. You compare it to the current dividend yield, 2.31, or over here where it says forward, same number, forward dividend. 2.31%. Since the current dividend at 2.31% is higher than the 5-year average, that speaks to potential undervaluation, at least according to dividend yield theory. Payout ratio is low at 31.32%, so nice low payout ratio. Not really concerned with them cutting their dividend, and plenty of room to raise that dividend over time. Jumping down, I like to look at free cash flow. I want growing free cash flow over time because companies can do some things with that free cash flow. They can pay a dividend. This company does. They can raise that dividend, reinvest back into the company, buy back shares, make acquisitions, even keep some of the cash on hand if they want to as cash, or reinvest it, back into the market themselves or into other companies, which is often what companies do. Free cash flow going back to January 2022, $1.3 billion. 2023 was down to $557 million. 2024 back up to $939 million, and then 2025 at $509 million so far reported for the 2025 numbers. But keep in mind, we are still in 2025, so this is just the early reports. Repurchase capital shares, they are pulling shares out of the market as well. Again, going back to January 2022, $1.1 billion in 2022, dropped that down. So not only a free cash flow drop, but decreased the amount of free shares or repurchase of shares in 2023 also. So $458 million and some change bought back. 2024, $648 million. So climbed back up in both free cash flow and repurchase of shares in 2024. We, again, won't know what 2025 shakes out until we get to the rest of the year, but it looks like they're continuing that trend at $263 million and some change so far taken out of the market. And if they're cheap, we want them to be buying back whenever they are cheap. Now, jumping over to stockanalysis.com, this is another source I go to for information. Again, not affiliated with stockanalysis.com or Yahoo Finance, just two sources I go to for information. I do recommend more than one source so you can make sure the information you are looking at is accurate and up to date. They do have 20 professionals, analysts here that have taken a look at this. They call it a consensus buy. If you were to go to stockanalysis.com, you'd be able to click on each one of these tabs, see how many might call it a strong sell, a hold, a buy, which is what the consensus is saying, or a strong buy. And 20 is a pretty good number of analysts that have taken a look at this. Low estimate of $187. It currently sits lower than that lowest estimate, so that would be a 4.45% increase from where it currently sits. Average estimate of $240.45. That would represent a 34.3% increase from where it currently sits. And if it happened to hit their high estimate of $294, that would represent a 64.21% increase in the stock price. Now, jumping over to the right, I like to look at return on capital employed right here. I like 10% or better. They're looking at 19.98%, so almost double what I'm looking for there. Earnings per share growth, I like 5% or better forecasted over the next 5 years. They're looking at 6.93, so just above what I'm looking for there, with revenue growth forecasted at 4.73. Good numbers overall. Jumping again into their dividend history as we wrap this one up. Quarterly payer, as we mentioned before, payout ratio is low in the 30% range, 34.51%. Dividend growth, double digits, 10.06. Now, they haven't been growing it for very long, only a couple years here. Buyback yield is positive at 3.49%. That means they are efficiently buying back shares, pulling more shares out of the market than they are putting into the market. Shareholder yield positive as well at 6.2%. And going back in time here, September 2022, they were paying 48 cents and some fractions of a penny. Raised that up March 16th to 2023. Looks like they held it there actually through 2023, through 2024, and just recently had a raise in March 2025 up to $1.21. That's where they currently sit now. All right, understand the business. Yes, they get a check there. Again, they're a retailer. They're selling you, apparel. They're selling you sports goods. They're selling fishing gear, that sort of thing, outdoor gear. You need a canoe or something, you could go buy one from Dick's. You could also get your cleats and your baseball bat there while you're there, and a basketball and a football and any other sport that you wanted to play almost. Growing dividend, I don't know if they had pickleball there. Maybe they do, maybe they don't, but that's not one that I look at. So maybe it's not all sports, but primarily the ones that are played here in America. Growing dividend, yes, check there. Dividend payout ratio is ratio of under 75%. Yes, in the 30% range. Dividend yield theory says they're potentially undervalued, so check there. Buy below current cost basis or within 15% of a 52-week low. They are within 15% of a 52-week low. It's not in my portfolio, so it can't be below my cost basis. Check there. Return on capital employed, 10% or better. Yes, check there. It was at 19, and earnings per share growth over 5%. It was at 6 and some change, so check there. We're looking at 1, 2, 3, 4, 5, 6, 7 out of 8. I believe this one is already on my watch list. We've looked at this one before. It is an interesting company. If you could get it cheap enough, it might be worth it, but I'm always worried if we're entering a potential recession or a downturn in the economy overall, how these companies are impacted. And with the unknowns with the tariffs right now, I don't know how much of their material, goods, and equipment come from overseas and how much it will be impacted and how much that will impact future numbers. Maybe that's part of the reason. Maybe it was a downgrade today because it was their earnings. So I would go look at their earnings report, do some more research on this one, see how it might be impacted, or kind of think about how it might be impacted if we do enter a downturn. And maybe there's future down on the stock price on this one. Who knows? Interesting company. I know I shop there for my kids, so it is one that I am familiar with. Let me know what you think of Dick's Sporting Goods down in the comment section below. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Let me know what you think of Dick's Sporting Goods. Is it one you're watching? Is it one you're buying? Is it one maybe you were selling today? Maybe you're part of the downturn in the stock price because you were selling out. Who knows? Let me know what you think. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Dick's you'd like me to cover in the Stock Pick of the Day series, drop it down there below. I'll try to work it into the rotation on a day it pulls back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those that take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend, and we will see you on Sunday for the portfolio update. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing for educational and entertainment purposes. Investing involves risk you can lose. Money should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select the criteria, or seek the advice and counsel of a certified financial advisor. And for those of you who made it to the end, really appreciate you watching to the end. Don't forget to hit that subscribe button, like, share, comment, and again, appreciate you watching to the end.